Hey folks, it's Simon here with your Tao Daily video, recording this after market close on Friday, the 19th of July, 2024. Indices or markets were weaker again today, and they really just haven't caught a break since this big gap down we saw on Wednesday. So we've had three pretty weak sessions in a row. Look, I think that today's session, Friday's session, was probably weaker than it would have been, but for the CrowdStrike fiasco. All right, it seems as though CrowdStrike pushed through an update patch to Windows software, which kind of brought Windows tumbling down. And with it, we had right around the world, we had airlines, we had airports, we had financial institutions, we had the London Stock Exchange temporarily ground to a halt. All manner of businesses, big and small, right across the world were impacted. And I think that sort of uncertainty probably added to a bit of bearish sentiment in the markets as well. That said, let's just have a look at some early reports from the earnings season. So Netflix reported earnings after market on Thursday. The stock actually reported better than expected EPS. Revenues were in line. Guidance was a bit mixed. Stock tried to rally, but ended up closing down 1.5%. It now looks like this little bull run for Netflix is over, at least for the time being. And then before market today, we had a few stocks report as well. We had American Express. Now, American Express reported better than expected earnings. Revenues were slightly weaker, but they actually raised full year EPS guidance. But still, the stock was down 2.74%. We had Halliburton report as well. Stock was down 4.3%. That was after reporting inline EPS on weaker revenues. And then we had Schlumberger. Schlumberger actually did perform. The stock was up nearly 2%. That was reporting better than expected EPS. Revenues that were roughly in line there. Travelers, that stock was down nearly 8%. Big fall there. And that was, again, on the back of better than expected EPS on inline revenues. So it does look as though the bar has been set pretty high for stocks this reporting season. And unless they can tick all the boxes in terms of revenue, EPS and guidance, all being better than the market was looking for, it looks like they're going to be dealt with fairly harshly. Earnings season, of course, really kicks off next week. We've got a number of big hitters, including Google, Alphabet, Tesla, Visa, Texas Instruments, UPS, Spotify. We've got a whole cast of big reports coming out next week. And the following week is even bigger with heavyweights like Apple and Microsoft and Amazon reporting. Keeping a quick eye on dollar yen. As I mentioned in yesterday's video, it didn't do much today, but it certainly held Thursday's bounce. I wouldn't be surprised if equities do have a small bounce next week. All right, I wouldn't be chasing that to the upside. But if dollar yen can continue to gain here, I would expect equities, Nasdaq in particular, will follow suit. Albeit, I do not expect the indices to make new highs in the near term. I think these highs will hold for a while. That's what I got for you. I hope you have a great weekend, and I'll catch you next week.